If medical debt has been holding you back from buying a home, everything is about to change. By the end of February, possibly into the beginning of March, $49 billion in medical debt will be wiped from credit reports, giving 15 million people a fresh start. That means higher credit scores and thousands of new mortgage approvals, possibly including yours. Now, if you're new here, my name is Kyle. I'm a licensed loan officer. So you can go to winthehouseyoulove.com whenever you're ready to get looking at a pre-qualification, or you just need some help through the next steps. There's also some tools here available to help you through your home buying decisions. So this new rule has been enacted by the CFPB. Now, right now, it's a little bit unclear what's going to happen with the CFPB with the current administration. So in the comments, I'll keep you updated on if we see anything happen. But this rule so far has been finalized. So we expect this all to be moving forward as expected. So this is a major opportunity for those who have struggled with a mortgage approval due to medical debt. Thousands of people are denied mortgage loans every year because of medical debt that shows up on credit reports through collections. And so that really can impact if you're going to be able to get a mortgage or not. So if you're in this situation, I want you to consider reapplying for a mortgage, or if you haven't even started applying for a mortgage, I want you to consider applying if you've avoided applying because of medical collections or a low score due to medical collections, or if you were denied for a mortgage due to medical collections or a low credit score, because odds are you will have a better chance of approval once these come off of your credit report. So here's what's changing here. And again, this is from the CFPB. The CFPB is the one that regulates consumer lending. So they're the ones who protect you from unfair lending practices. So they said medical debts provide little predictive value to lenders about a borrower's ability to repay other debts. And consumers frequently report receiving inaccurate bills or being asked to pay bills that should have been covered by insurance. Okay, so what they're saying here is statistically, they're not seeing a difference in people who have these medical collections being able to repay their mortgage or not. Okay, so I know people's first reaction to things like this is all of a sudden there's going to be tons of foreclosures and stuff like that. But what they're saying here is there's not a lot of value in using medical debt on the collection report to determine if someone's able to pay back a mortgage or not. So the new rule here is saying two main things. One, that lenders are prohibited from considering medical debt when they're making a decision on if you can get a mortgage or even something like an auto loan or credit cards. Those are going to be excluded from your credit report, so the lenders can't see if you have those medical collections. Also, medical bills are no longer going to appear on credit reports. Now, keep in mind, when medical bills show up on the credit report, it's because that they're past due. They're in a collection account. And so your normal medical bills never are factors in getting a loan anyway. It's just when they become collections, that's when they show up on your credit report. And that's when they have a big impact on your credit score as well. So why does this matter to you? Medical debt does not accurately predict someone's ability to repay a loan, right? Also, many people receive inaccurate medical bills or charge for costs that should have been covered by insurance. And if you've never tried to dispute something off your credit report before, that can be really difficult and time consuming. And so if you're in the stage of wanting to buy a home, but you have something inaccurate on your report, let's say a medical bill should have been covered by insurance, and now you're trying to fight with the insurance company and it's on your credit report, that can take forever to clear up, and that's going to prevent you from buying a home. So this prevents those issues. Also, no one should have their financial future derailed due to unexpected medical expenses. So this rule is protecting you in those situations. So if you're ready to get started, what you want to do is first you want to get pre-qualified. Our team works in all states except for New York. We'd be happy to help with your pre-approval. You can just go to winthehouseyoulove.com/lender to get started on that. And then once you're ready to find a realtor to then go start shopping for homes, you can go to winthehouseyoulove.com/agent to be connected with a helpful agent in your local area.